Good morning. It's November 10th, 2023, and it's 9:04 a.m. as I record this, and I wanted to just share how we contain risk and also put an emphasis on trying to keep it simple. And that's a struggle I always have because I tend to want to overcomplicate, and I've been an indicator junkie. I'm going to show you how we planned 2 trades on the NQ and met our daily profit. But before we do, keep in mind that all information in this video is provided for educational purposes only, and it's not an offer or a recommendation to trade futures, stocks, options, or Forex. So what we do first off is we look at our, determine what risk is going to be, and we'd like to look at a 0.5% risk on our account size. So our trading account is currently at $82,000, so simple math, 0.5% of that's $410. So once we establish that risk, we can set up our chart, and once we determine where our entry is, then we measure where that daily target would be. So you can see that we entered on this pullback to the trend dot right here, so we were able to easily measure where our daily target of $410 might lie. Now, why did we get in here? Well, typically what we do is when we see both the vertical thin dashed green line and solid green line, we wait for a pullback, ideally to the trend dot, and we almost got it here, and that would have been maybe a more aggressive trade, perhaps. If you wanted to front run that just a tad, I certainly do it often. But I just thought I would stay strictly to the rules where I wait, at least for the sake of this presentation, where I wait for price to come back and tap that, and then I set my risk. Now, I set it here based on this somewhat of a swing low right here, and you can see that the risk was $335, so it was less than, actually less than a 0.5% on the account, but we also want to shoot for an equal amount at a minimum as far as our profit target, which was the $410, and it was met pretty promptly. As far as any other possible entries on this chart, if we look down here at about 6:30 or so this morning, we see that we actually put in a double bottom right at there. Of course, we didn't know that at the time until price reversed and gave us some distance away from that low. But interesting, we got our indication of a reversal right here with this green candle, and again I struggle with that Japanese name, but it's basically this body of this candle is contained by the prior candle right here, and you can see that that's the case. Then we had a bullish engulfing candle here, so we had some what was looking like some positive interest in going to the long side, and then we came up. Notice this pullback back to the trend dot. So if you're using the tape reading, as I've demonstrated in the past, you'd still be in this trade, at least as far as this. I don't know. Yeah, I'm looking at the live chart over on my other monitor, and you'd still be in this trade. But nonetheless, if you had gotten in on this pullback right here, you didn't have everything in play. You didn't yet have the RSI had not crossed above the 50 line right there. The 1-day moving average was still sloping down, as is the 5-day up here. So that was a counter trend trade by getting in on this pullback. And what else on our 3 moving averages? We have the we did not yet have the red stacked properly with I should say the red is the 15, and that wasn't properly stacked with the 30 and the 60. That didn't really happen until right about here, which was another opportunity to enter. This could have been the initial entry. You see we call this our secondary vertical line, the thin one, when the 15 crosses the 30, and this is the primary because that's when the 30 crosses the 60. But nonetheless, another opportunity to enter would have been on a pullback here. It came right back to the 1-day moving average right here, and by that time we had RSI was across its 50 level, We had we just about had proper stacking of our 3 moving averages, and of course our trend dots are nicely sloped up and to some degree are beginning to spread apart, which is good. Then we had this other possible entry here on the pullback that we've already talked about. And take a look at how volume also speaks to us. Back when this entry here, you can see that the volume was increasing as price was rising. So there was a demonstrated interest on the part of many of the players that they were taking this to the long side. So I think that's basically, and nothing really complicated here. You know, you would try to keep it simple, manage your risks as we demonstrated here. I mean, my gosh, look at this entry right here. There was really no drawdown against you. I mean, that is just what I want to see. So I'm going to pay attention to this 5-day moving average right here as the New York session opens and develops for the first hour, to see whether we get a little bit of a flattening here or maybe even a turn up, and with further confirmation with the 1-day moving average and all our other moving averages as well. So I think that is it. I don't want to drag this out any further than it has to be. Keep it simple. Be disciplined in your approach. And as I said at the beginning of this, practice FAR. First assess risk. Because remember, if you lose 50%, you've got to gain 100% to get back to break even again. So you got to contain those losses and put the brakes on real quick when it starts to threaten to go against you. So let's see, what else do we have? I think that's it, really. So when trading, do the 2-step. Practice FAR. First assess risk, and number 2, keep it simple. So thanks for watching, and sign up below for the Ninjacators Free Indicator of the Month Club. You'll save hundreds of dollars and add to your arsenal of tools at the same time. Take care and successful trading.